because what I've found is that the market doesn't just go straight up or down. It actually goes in waves. So if I have my stop loss and take profit set, it might do a wavy thing. And what's going to happen in that is, if I move my stop loss up, maybe it needs a little more pullback before it goes and hits my take profit. But if I move my stop loss up and it goes to do the pullback, it'll just kick me out of the trade. And I know a lot of traders have this issue where they end up they end up having a potentially profitable trade, but because they're not setting their stop loss and take profit correctly, they end up losing that trade. So it's very important to understand, where I set my stop loss and take profit. I always use 1-to-1 risk reward ratio. Now you might be wondering, what do you mean by 1-to-1 risk reward ratio? What I mean by that is, wherever I set my stop loss, for example, if I set it at 100 points, I will also set my take profit at 100 points. So I give the market enough room to be able to move without kicking me out of the trade. So I don't want you guys to be losing money. I want you guys to understand how it is I make money. And the reason I make money is because, for example, in this account, I have 221,000 at this point, right? And I'm doing trades of $200 or, $300. Now, that's like less than 1% of my balance. Okay, that's less than 1/4% of my balance. That's the same thing as if you had $1,000 in your account and you were doing, for example, like a $1 trade, right? That's the same thing. So, at that point, you wouldn't be like, oh, would you be scared if your trade was hitting stop loss? If you had $1,000 in your account and you were doing a $1 trade? No, you would be like, it's all good. If I hit stop loss, no problem. We'll move on to the next trade. So, you're being greedy and you're being, fearful because you're like, oh man, I have a $500 account. I want to make it into 100K. And on the other side, on a $500 account, if on a trade you're negative 200, that's like, that's a huge percentage of your account you'd be down. So you want to protect yourself from both sides. You don't want to get too greedy, and you don't want to get too scared of trading as well. And the way to manage that is by managing your risk. Now, that's going to get overwhelming. We're not robots, so we have to really understand that 2 or 3 markets is like the max that I would be focused on at a time. What I would want to find is the most volatile markets. What does it mean by volatile? The markets that move the most. And for me, the markets that move the most is Bitcoin and gold. They have so much volume every single day. And especially Bitcoin is open 24/7. So anytime, like guys, look, it's a Saturday morning and I'm here